$347 million in Trump properties now under federal control. That's not a routine audit. That's systematic dismantling. At exactly 5:47 a.m. this morning, federal marshals arrived at Trump Tower with seizure orders, not polite requests for documentation. Armed enforcement officers with the legal authority to take physical control of assets worth more than some countries' annual budgets. This is what institutional accountability looks like when it finally arrives. While most of New York was still asleep, federal vehicles surrounded multiple Trump properties across 3 states simultaneously. The coordination was surgical, the timing was deliberate, the message was unmistakable. Think about what that means. Federal marshals don't show up at dawn unless someone has crossed a line that can't be uncrossed. They don't coordinate multi-state operations for paperwork violations. They don't seize $347 million worth of real estate because of minor accounting discrepancies. Security footage from Trump Tower shows exactly what unprecedented looks like. Federal officers walking through the gold-plated lobby with documents that give them legal control over one of Manhattan's most recognizable buildings. No negotiations, no extensions, no mercy. We're witnessing the collapse of a business empire in real time. The same properties that were plastered across magazine covers and held up as symbols of success are now tagged with federal seizure notices. The transformation is immediate and total. Where are you watching this unfold from? Drop a comment and let us know your location. Have you ever witnessed accountability this decisive in your own community? Because what's happening right now sets a precedent that changes everything. The arithmetic is devastating. $347 million represents decades of accumulated wealth, hundreds of employees' livelihoods, and the foundation of a political operation that claimed to represent business success. All of it now under federal control because someone decided the rules didn't apply to them. This isn't the beginning of a legal process. This is the end result of a legal process that has already determined guilt, calculated damages, and decided consequences. The seizures are happening because every other option has been exhausted and found insufficient. By 6:15 a.m., federal marshals had established control over properties in New York, Florida, and New Jersey. The scope reveals the systematic nature of what triggered this response. You don't coordinate operations across state lines unless the evidence demands it. Judge Engoron's $355 million fraud ruling wasn't based on suspicion. It was based on systematic documentation of deception spanning decades. Every inflated valuation, every falsified document, every lie told to secure favorable loan terms was cataloged, verified, and presented as evidence of institutional fraud. The pattern is devastating in its scope. Mar-a-Lago, the crown jewel of the Trump property empire, was valued at $739 million for loan applications. Independent appraisers determined its actual worth at $75 million. That's not a miscalculation. That's systematic deception designed to extract money from financial institutions based on false information. Think about what that represents. Nearly 10 times the actual value claimed as fact on documents submitted to banks, documents signed under oath, documents that became the foundation for loans worth hundreds of millions of dollars. And it gets worse. The Trump Tower penthouse was claimed to be 30,000 square feet on financial statements. The actual size is 11,000 square feet. For anyone who understands real estate, inflating square footage by nearly 3 times isn't a mistake. It's fraud designed to manipulate per square foot valuations and create artificial asset values. Deutsche Bank alone extended $2 billion in loans based on these fraudulent documents. $2 billion in institutional money flowing to projects justified by information that was systematically false. The bank's internal documents show loan officers specifically relied on the property valuations that have now been proven fabricated. Here's where the scope becomes truly staggering. The New York Attorney General's 4-year investigation didn't just find isolated incidents of inflated values. They documented a business model built on deception. Every major property, every significant loan application, every financial statement submitted to insurance companies and tax authorities contained material misrepresentations. Expert witnesses testified that the level of systematic deception was unlike anything they had encountered in decades of financial fraud investigation. not occasional overstatements, not optimistic projections, deliberate, calculated lies designed to extract maximum financial benefit from every transaction. The financial institution's documented losses reach $168 million. That's money that could have funded legitimate business development, supported actual entrepreneurs, or provided credit to companies operating with accurate financial information. Instead, it disappeared into an empire built on fraudulent foundations. Each revelation in the court proceedings revealed another layer of institutional deception. Tax filings claimed lower property values to minimize obligations. Loan applications claimed higher values to maximize borrowing capacity. Insurance policies claimed different values entirely to optimize coverage costs. The same properties valued differently for every audience based on whatever number would produce the most favorable outcome. Banking relationships that took decades to build were destroyed in months of testimony. Financial institutions that had viewed the Trump Organization as a prestigious client were forced to confront evidence that their due diligence had been systematically circumvented through false documentation. The courtroom evidence didn't just prove fraud, it proved a business philosophy based on the assumption that rules, regulations, and legal obligations were obstacles to be circumvented rather than standards to be followed. Every transaction was an opportunity to misrepresent. Every relationship was a chance to deceive. When the final ruling was announced, it represented more than financial penalties. It represented the institutional response to decades of documented fraud, finally reaching the point where consequences could no longer be delayed or negotiated away. The deception wasn't delegated to subordinates. Court documents reveal Trump's personal involvement in crafting the fraudulent financial statements that became the foundation of his business empire. His signature appears on documents containing valuations he knew were false. His direct testimony confirmed he understood the numbers were inflated for financial gain. From 2011 to 2021, every annual financial statement contained material misrepresentations. 10 years of systematic fraud, documented in black and white, signed and submitted to major financial institutions across the country. This wasn't occasional optimism about property values. This was decade-long commitment to institutional deception. Eric Trump's deposition revealed the mechanics of the fraud. When questioned about 500 Fifth Avenue, he admitted the property was valued differently for different purposes. Tax assessments claimed one value, insurance policies claimed another, loan applications claimed a third, the same building, the same square footage, the same location, valued at whatever number would produce the most favorable outcome for each transaction. Donald Trump Jr.'s testimony went further. He acknowledged that asset values were routinely inflated to meet loan requirements. When pressed on specific examples, he confirmed that properties were assigned values that bore no relationship to independent appraisals or market comparables. The fraud was family knowledge, family practice, family business model. Here's what makes this truly systematic. Different valuations weren't just submitted to different institutions. They were crafted specifically to exploit each institution's particular requirements. Banks received inflated values to maximize borrowing capacity. Tax authorities received deflated values to minimize obligation. Insurance companies received optimized values to balance coverage with premium costs. The ripple effects extend far beyond the Trump Organization. Banking industry confidence in commercial real estate valuations has been shaken. If fraud of this magnitude could persist for a decade at the highest levels of New York real estate, what other systematic deceptions are hiding in plain sight across the industry? Individual investors who bought into Trump-branded projects based on representations of financial stability lost millions when the fraud was exposed. Pension funds that invested in Trump SPACs ventures saw their investments collapse as the underlying financial representations proved false. The human cost extends far beyond the immediate Trump Organization properties. The luxury real estate market in Manhattan is recalibrating. Properties that commanded premium pricing based on association with Trump-branded success are now viewed as potential fraud indicators. The brand that was once synonymous with wealth and success has become synonymous with institutional deception and regulatory violation. Insurance company investigations triggered by the fraud findings are expanding across the industry. Carriers are implementing enhanced verification protocols for high-value properties, recognizing that their standard due diligence was systematically circumvented for years. The cost of this enhanced scrutiny will be borne by every commercial property owner seeking coverage. Letitia James stated the scope of deception was unprecedented in New York legal history, not just the dollar amounts involved, but the systematic nature of the fraud across every aspect of business operations. Every loan, every tax filing, every insurance policy, every business partnership was built on false financial representations. Trump's social media responses to the investigation revealed escalating desperation, from dismissive denials to personal attacks on investigators to claims of political persecution. The progression demonstrated awareness that the documented evidence was insurmountable. When someone resorts to attacking the messengers, the message has usually been delivered successfully. Legal experts confirm this is the largest civil fraud case in New York State history, not just in dollar amounts, but in the scope of systematic deception across multiple industries and institutions. The precedent being set affects every major commercial real estate operation in the state. The investigation triggered reviews of other Trump business licenses across multiple jurisdictions: real estate licenses, casino permits, golf course operating agreements, all now subject to enhanced scrutiny based on evidence of systematic fraud in core business operations. The institutional response is expanding beyond the immediate properties to encompass the entire business empire. International properties are facing parallel scrutiny. Scottish authorities are reviewing Trump golf course environmental permits based on financial misrepresentations. Irish regulators are examining Trump resort licensing based on fraudulent asset documentation. The fraud documented in New York is triggering accountability mechanisms worldwide. This isn't about political targeting or selective prosecution. This is about institutional response to documented fraud that was so systematic, so pervasive, so well documented that ignoring it would have undermined confidence in the entire regulatory framework that governs commercial finance, real estate transactions, and business licensing. The evidence wasn't gathered through political opposition research or leaked documents. It was compiled through standard regulatory investigation, court-ordered discovery, and sworn testimony under oath. The fraud was hiding in plain sight, documented in official filings, confirmed by the participants, and validated through independent verification. When federal marshals arrived at Trump properties, they weren't conducting a raid or fishing expedition. They were executing the inevitable conclusion of a legal process that had systematically documented fraud, calculated damages, and determined that the only appropriate response was seizure of assets to satisfy the documented obligations. Barbara Jones, the court-appointed monitor overseeing Trump Organization operations, confirmed systematic violations of every compliance requirement, not occasional oversights or administrative errors. Deliberate circumvention of court-ordered financial transparency measures designed to prevent exactly the kind of fraud that had been documented. According to former federal prosecutor Barbara McQuaid, this level of fraud typically results in criminal charges. The civil ruling represents just the beginning of legal consequences, not the end. When fraud is this systematic, this well-documented, and this pervasive, criminal referrals become inevitable rather than possible. Banking expert Jennifer Taub's analysis was definitive. No major financial institution will extend credit to the Trump Organization following these fraud findings. The reputational damage alone makes any lending relationship too risky for institutional investors and regulatory compliance. The business model that relied on leveraged real estate development is permanently destroyed. Real estate valuation expert Michael Kramer stated the fraud magnitude was unprecedented in his 30-year career. Property valuations inflated by 300 to 800% don't happen through honest mistakes or optimistic projections. They represent systematic deception designed to extract maximum financial benefit through institutional fraud. December 15th. That's the deadline for full compliance with asset seizure orders, not a negotiation point or starting date for appeals. A hard deadline backed by federal enforcement authority with no extension provisions and no alternative compliance mechanisms. January 22nd has been set for additional penalty hearings. The current $355 million judgment represents documented damages, not the ceiling for potential consequences. Additional penalties for obstruction, non-compliance, or discovery of undisclosed assets could push total obligations well beyond $500 million. 72 hours. That's the window Trump has been given to provide accurate financial disclosures for all domestic and international properties, not approximations or good faith estimates. Verified, independently appraised, professionally documented asset valuations that can withstand regulatory scrutiny. Trump's legal team has filed emergency appeals to the New York Appellate Division and prepared preliminary petitions for the Supreme Court. Legal experts confirm that appeals courts rarely overturn fraud findings when evidence is this comprehensive and systematic. The documented evidence isn't in dispute. The legal interpretation isn't controversial. The consequences are following established precedent. The Supreme Court is unlikely to intervene in state-level fraud cases where federal constitutional issues aren't present. Civil fraud enforcement falls clearly within state regulatory authority. Federal courts don't substitute their judgment for state findings when evidence supports the conclusions and procedures follow established legal standards. Here's what time pressure creates. Every day, the $355 million judgment remains unpaid. Interest continues accruing at New York's statutory rate. The obligation grows larger every morning. Delays don't reduce consequences. They amplify them through compound financial penalties. Additional properties have been identified for potential seizure if initial compliance proves insufficient. The Trump National Golf Club properties, various licensing agreements, and international brand partnerships are all subject to asset recovery procedures if primary obligations aren't satisfied through the December 15th deadline. Criminal referral possibilities from the Attorney General's office are being actively considered. Civil fraud findings create evidentiary foundation for criminal prosecution. The same documents, the same testimony, the same systematic deception that supported civil penalties provide probable cause for criminal investigation. Federal agencies are reviewing Trump Organization government contracts and licensing agreements. The General Services Administration is examining Trump International Hotel lease compliance. The Federal Aviation Administration is reviewing Trump-branded airport facility agreements. Fraud findings trigger automatic reviews of federal business relationships. International authorities have requested cooperation on related investigations. Scottish environmental regulators want documentation related to Trump golf course permit applications. Irish gaming authorities are reviewing Trump resort licensing based on financial misrepresentations. The accountability is expanding across jurisdictions. Financial documents related to Deutsche Bank loans have been sealed pending federal review. The same bank that extended $2 billion based on fraudulent documentation is now cooperating with federal investigations into potential criminal violations of banking regulations and loan application fraud statutes. Former Trump Organization CFO Alan Weisselberg's cooperation with state and federal investigators has been confirmed through court filings. His detailed knowledge of systematic fraud practices, combined with documentary evidence and recorded conversations, provides prosecutors with insider testimony to corroborate the institutional deception. This is what inevitability looks like when institutional accountability finally engages. Expert validation from every relevant professional domain, legal deadlines that can't be negotiated or delayed, criminal referral procedures already in motion, international cooperation expanding the scope of consequences. The clock isn't just ticking on compliance deadlines, it's ticking on a window of time when negotiated settlements might still be possible. Once criminal charges are filed, once additional penalties are imposed, once international investigations expand, the opportunity for limiting consequences through cooperation disappears entirely. Think about what December 15th represents, not just a compliance deadline, but the date when systematic fraud either produces full accountability or triggers even more severe consequences. The system is working exactly as designed when evidence is this overwhelming and documentation is this comprehensive. The Trump campaign is facing a financing crisis as major donors withdraw support. When your business empire is built on documented fraud, institutional investors don't just pause contributions. They permanently sever relationships to protect their own reputational integrity and fiduciary obligations. Republican Party leadership finds itself forced to distance from associations that have become toxic to electoral viability. Strategic campaign partnerships that took years to develop are being quietly dissolved as party operatives recognize that defending systematic fraud becomes politically indefensible when evidence is this comprehensive. Future property development becomes impossible without institutional lending. Commercial real estate development requires leverage, requires banking relationships, requires insurance partnerships. All of these institutional requirements have been permanently severed by fraud findings. The business model that built the empire cannot be reconstituted. The legal precedent established by this case creates vulnerability for other high-profile business figures operating with questionable financial transparency. Prosecutors now have a roadmap for investigating systematic fraud in commercial real estate, validated procedures for asset seizure, and judicial precedent for imposing consequences that match the scale of documented deception. Banking industry protocols are being strengthened industry-wide. Enhanced verification requirements for commercial property valuations, mandatory third-party appraisals for high-value assets, and expanded due diligence procedures for prominent business clients are being implemented to prevent future systematic deceptions from persisting undetected. New York real estate market confidence is being restored through demonstration that accountability mechanisms function when evidence warrants intervention. Legitimate developers benefit from enhanced regulatory credibility. Honest businesses gain competitive advantage when fraudulent competitors face appropriate consequences for systematic deception. Political viability questions are being raised by former allies who recognize that association with documented fraud becomes electoral liability rather than strategic advantage. Campaign endorsements that were once sought after are now avoided as politically toxic by candidates who understand voter response to systematic institutional deception. International business partners are severing relationships permanently. Global licensing agreements, foreign development partnerships, and overseas branding arrangements are being terminated as international businesses recognize that association with documented fraud carries reputational risks that extend far beyond American legal consequences. Think about what this represents for democratic institutional integrity. When systematic fraud is documented, investigated, prosecuted, and punished appropriately, it demonstrates that legal accountability functions regardless of political prominence or claimed business success. The system is working as designed when evidence is overwhelming. Legacy media organizations that spent years treating Trump business claims as credible are being forced to acknowledge their role in amplifying systematic deception. Editorial boards that endorsed business competence claims must now confront evidence that their credibility was exploited to legitimize institutional fraud. The broader implications extend to regulatory confidence across commercial sectors. When major fraud is successfully prosecuted and appropriate penalties imposed, it strengthens institutional trust in legal frameworks that govern business operations, financial reporting, and commercial real estate transactions. Campaign infrastructure built around business success narratives becomes unusable when the underlying business model is revealed as systematic fraud. Political messaging that relied on wealth demonstration and deal-making competence collapses when the wealth was fraudulently obtained and the deals were built on false representations. This is what accountability looks like when institutions function properly. Evidence gathered through legitimate investigation, legal proceedings that follow established procedures, penalties that match the scope of documented violations, consequences that restore integrity to systems that were systematically exploited through institutional deception. Federal marshals executed their seizure operations with the precision that demonstrates institutional accountability, functioning exactly as designed. No negotiations, no delays, no special considerations for political prominence or claimed business success. The law applied equally, enforced systematically, delivered inevitably. $347 million in seized assets represents the largest civil fraud recovery in New York State history, not just in dollar amounts, but in the institutional demonstration that systematic deception no matter how sophisticated or prolonged, ultimately faces consequences that match the scope of documented violations. No appeals court in American legal history has overturned fraud findings supported by this level of documentary evidence, expert testimony, and systematic proof of institutional deception. The legal precedent is established, the evidentiary standard is met, the consequences are following established judicial procedure. Banking industry rejection is complete and permanent. Major financial institutions don't resume lending relationships after fraud findings of this magnitude. The reputational risk alone makes any future business relationship impossible. Legitimate finance has permanently exiled systematic fraud from its operations. Trump Organization's business model is destroyed beyond reconstruction. Commercial real estate development requires institutional lending, requires banking partnerships, requires insurance relationships, requires regulatory cooperation.